Hello, this is John Thomas, the Mad Hedge Fund Trader, with you today from Silicon Valley, California. And today I'm going to talk about the big technology plays for 2021. First of all, before you spend time with me, I have to tell you a little bit about my backstory. I have 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, little brief time out as a Marine combat pilot in Desert Storm, 10 more years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, 13 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still working. My family origins are very humble, growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood, playing Little League baseball and eventually becoming an Eagle Scout. There wasn't much to do in rural California in the old days, but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. Here's one of the first papers I ever delivered covering the Kennedy assassination. I found the stock pages and bought IBM at $20 and sold it at $30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe, and that was back when it cost an absolute fortune. By the time I was 17, I had visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, and that landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government, in all their wisdom, sent me to Southeast Asia for a few years of research, where I learned to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. That's me there with the Republic of China. Of course, in those days, doing research meant carrying a 45 caliber Sten gun, which used to reliably jam on every 6 shot. After 10 years of government service, I ended up with this box of medals, which I trot out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. And if you're wondering why I'm so skinny in that picture, it's because China just had a famine where 50 million people died. I don't think they ever told anybody about it, though. I figured out very quickly you didn't have to be that smart to make money in the stock market. So I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund. And I know you're thinking, boy, the years have been cruel. That's my Morgan Stanley ID card from 1983. And that's me losing the All Japan National Karate Championships. Warning, do not enter a karate match with a broken wrist. That's what I did, but I wanted to really make the finals. I rapidly became the top performing hedge fund of the 1990s, bringing in a 1,000% return in a decade. Of course, that's when there were only 115 hedge funds and big was considered $25 million. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to do things like fly your private plane around Europe. I think I landed at something like 200 airfields in Europe, including all the ones that were grass. Get to buy the latest hot car, go marlin fishing in Mexico. And by the way, we ate this one as sushi right on the beach. And you get to collect vintage Rolls Royces. That's my 1925 Silver Ghost at the Pebble Beach Car Show. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the Diary of a Mad Hedge Fund Trader in 2008. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it from my 3 mansions in San Francisco, Lake Tahoe, and Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching them how to trade. And that includes you. If I can take $50,000 account and turn it into 500,000, that is far more job satisfaction than I can ever get anywhere. And notice the one thing in common, I love views. That's the view from San Francisco Bay. That's the view of the Golden Gate Bridge. That's the view of the Matterhorn. Unfortunately, I can't visit the home in Switzerland this year because Americans are banned from visiting. Apparently, we are too infectious to be allowed into the country. However, every silver lining has a cloud. 3 million 8 in taxes due on my 2018 return, on 10 million 5 in trading income. I just fall down on my knees, and thank God I can pay that amount of taxes without it having a big effect on my lifestyle. That wouldn't be so true a few years ago. It's a problem you wish you had. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. That's my 1932 de Havilland Tiger Moth. Notice the design flaws, gas tank directly over your head, and oh, no brakes. We can only land on grass fields. Guess that's why the fatality rate of pilots was so great in the old days. The ultimate luxury, of course, is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and am a major donor to wounded warriors. When the wildfires hit in California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. Notice the sorting box here. I'm visiting my in-laws' house, which completely burned to the ground. They were looking for a gold ring, a wedding ring, and they eventually did find it because it was made out of platinum and didn't melt like everything else in the house. So, technology is the seminal investment theme of our lifetimes. Since World War II, technology has rocketed from 1% of the stock market capitalization to 25%, and it's on its way to 90%. Eventually, all companies will become tech ones or cease to exist. Over 50% of new retail sales have been online in 2019, with one company, Amazon, amounting for half of the growth, and that has recently accelerated. The earnings of tech companies are growing 50% faster than non-tech ones, and profit margins are double. Technology sector has been the top performer since the 2009 market bottom and will continue to do so for decades. COVID-19 has provided an accelerator for technology. The epidemic is accelerating all pre-existing trends in the market tenfold, bringing the future forward by 10 years and boasting creative destruction at an incredible rate. Guess what that means for the stock market? Stocks today are worth their 2030 prices. That is a lot higher than they are right now. Money is moving out of non-tech into tech, small into large, bricks and mortars into digital, value into growth, and technology is a huge beneficiary of all of these. And if you're wondering who that is, that's Charlie Chaplin in modern times. After the worst economy in a century, who gains? Well, innovation at tech companies has exploded. Many companies are rushing to handle sales increases in the hundreds of percent. Productivity at all of the companies is soaring to stay in business. U.S. economy is coming out of the other side of the pandemic will be far more efficient and profitable than the old one. Surviving stocks will soar with tech and biotech as the leaders. The next big dip in the market is the one you buy. Let's go through a few charts to make some of our points and show you where the value is. Tech stocks are actually cheaper today than they were a year ago, despite massive share price appreciation. That's because the earnings are growing faster than the shares are going up. A year ago, we had a 25 times price earning multiples on NASDAQ. 1 year later today, right now, we have an 18 multiple. That's because of explosive earnings growth. And this is where we think NASDAQ is going in 2021. We're down here at around 11,900. After a small dip, we think we see another explosive move up. Our 21 target for NASDAQ is 18,000, or about 50% higher than we are now. And if you're wondering what these blue boxes are, these are signals given by our in-house proprietary algorithm. It tells you when to sell, when to buy, and has a 90% efficiency rate. And of course, we stop out very quickly out of the 10% that turn out to be losers. So get into the following sectors right now. Artificial intelligence, or otherwise known as AI, is now permeating every aspect of the modern society, especially the trading of stocks. AI will determine the success or failure of all products and companies from now on. Today, trade the market without an AI-driven algorithm at your peril. AI tied in with big data now leads almost every major corporate sales and marketing initiative. The AI big data combo will also cure every major human disease over the next decade, creating a $1 trillion a year market for cancer cures alone. And who knows how much the COVID-19 vaccines will be worth. And of course, the big players there are NVIDIA and the ETF BOTZ, or BOTZ if you're from England. And that is the BOTZ, the Global X Robotics and Artificial Intelligence ETF. You can see it will have almost identical buy and sell signals on all of these stocks. We got out right as the market crashed in February, got back in the March, April lows, and got a double on this ETF up until now. And we're looking to buy the dip, targeting $60 in 2021. So another potential double for this ETF in 2021. Cloud-based applications. Of course, you've all heard about the cloud. All major companies are now shifting to cloud-based strategies. Exponential growth of data means that physical on-site storage is becoming impossible. For some companies, you need a server farm bigger than the Empire State Building just to house all the hard drives. There is no place for it to go but the cloud, where capacity is unlimited. Massive cloud growth is creating enormous demand for new internet infrastructure. Cloud-based service providers are one of the fastest growing technology providers. Problem is security. How safe is it? And of course, you want to be looking at Salesforce, Microsoft, and Amazon as the purest cloud plays. Salesforce is one of our favorite. We've been in it for many years. You can see our recent buy and sell calls from our algorithm here. A buy back here in June, a sell going into the September correction, buy going into the election, and this thing is ready to blast off to new highs anytime. We are targeting $400 a share in 2021, up from 266, buy on the next dip. Cybersecurity, of course, is big and getting bigger all the time. As the global economy moves online, so will the theft of most valuable properties. Cybersecurity is an arms race with the stakes rising rapidly. It's a great setup for investors with a small number of providers facing exponential growth. There's really no more than 6 companies in the world that provide a high-end service for the largest customers. Most large companies use all of the big 3 to cover all their bases and mitigate risk. Hacking is one of the few recession-proof industries, as we certainly learned this year. And there you want to look at Hack, the ETF, which is the basket of all the cybersecurity companies, Palo Alto Networks, CyberArk, and Okta. Palo Alto Networks has been one of our favorites for many years, and you can see we've been trading a fairly wide range there, getting a buy here, a sell up here, a buy down here, and we are targeting $400 a share for 2021. That's about a 35% gain for next year. Autonomous driving cars. Of course, I don't really drive cars anymore. I let my Tesla drive me around, and it's actually pretty good. The real danger is when you go into a non-autonomous car, you sit down, you turn on the gas, and you expect it to drive itself, and it doesn't. That can be pretty dangerous. It's happened to me a few times. The military's been the early spender on autonomous driving, and we'll get a ton of new money for R&D. They have a contest where they drive across Nevada on a 600-mile trail, completely driven by computers. Point-to-point self-driving at Tesla is only 2 years away, and the hardware is being installed on new models now, and they're charging you $8,000 just for the software. That's pure profit for Tesla and is built on the billions and billions of miles they've already accumulated in data from their existing fleet of 1.2 billion cars. Current applications, you can only drive on the freeway, will be going street to street pretty soon. Tesla, Google, and Uber and Apple are all striving for the lead in this area. Worker productivity will soar, measuring how much work you can get done when the car is driving itself, or watch movies, or send tweets to your friends, or whatever you want to do. Accident rate goes to zero with autonomous driving, crushing insurance companies and hospitals, where 50% of their emergency room patients come from car crashes. Who will become the low-cost provider and the volume producer? That's going to be Tesla for sure, followed by Google. So Alphabet is a great play here, or Google, and we had a nice little sell recommendation here, a buyback on the dip, and we've almost gotten a double on that, looking to buy the next dip in Google, and we're targeting $3,000 a share by the end of 2021. Online commerce, of course, Amazon's taking all over the world with 50% of all new online sales. COVID-19 has given them a turbocharger. Only another Amazon like Alibaba could challenge it. Antitrust or other government intervention won't challenge it anytime soon. Amazon Web Services is the 800-pound gorilla, which you can't see, and it's rapidly becoming one of the most valuable parts of the company, soon be worth $1 trillion on its own. With Amazon, with the early lead, Microsoft and Apple's are trying to emulate their cloud strategy. Here's the Amazon chart, and again, sold the big meltdown going into the pandemic crash, bought at the bottom, got a double off of that, and we're looking for nearly another double going into 2021. We see $5,000 a share for Amazon. Of course, Amazon has another story, and that's the breakup story. If you break it up, it'll be worth a lot more than it is right now, creating $1 trillion in free shareholder value. Just a matter of time before they get broken up. They're going to get too big to manage. Retail business will grow from 600 billion to 2 trillion. Web services go from 400 billion to 1 trillion. Advertising goes from 10 billion to 100 billion. Other services like food and healthcare will grow from 0 to 300 billion. Those are all new businesses, and they just announced their pharmaceutical service. Add it all together, it's worth $4 trillion on a breakup basis, and eventually they will be worth 6 trillion. That is a 50% premium to the current stock price. And you can forget about antitrust. It'll eventually break itself up, and we have a pro-technology government that is about to come into office in 2021, so a lot of their antitrust problems will go away. Internet infrastructure, another big sector. The new tax law created a massive break for new infrastructure spending of any kind. Any progress in a single tech subsector increased demand for all the others, so they have an exponential effect on each other. This creates an exponential growth curve for the entire tech industry, which is how it has come to account for such a large part of the economy so quickly. Tech is growing so fast that it is creating a jump in demand for semi-skilled blue-collar workers and other support jobs as server farms and other high-speed transmission towers cover the country. You no longer need a PhD from MIT to get a tech job, and of course the big names in this area are Cisco, Intel, and Skyworks. Of the batch, Cisco Systems is one of the cheapest. We've been trading the range on this all year. Got a sell back here in 2019, a buy in the pandemic crash low, and we're looking to buy the next dip here. Our target for 2021 is $100 a share. Big data applications, another important area. The mining of massive databases with AI is now becoming possible for the first time through government and private industry. Understanding how to access and manipulate this data is the key to understanding the future. Scientific research, weather forecasts, and even politics. Big data was a big factor in the 2020 election. IBM's Watson can read all the scientific papers on cancer ever printed in 8 minutes, enabling unprecedented levels of cross-referencing, and now we're on the 3rd generation of Watson. Big data needs new software applications to enhance and understand a massive server farms to house the data. And of course, the names we like there, Google, Facebook, Microsoft, and Amazon. Notice that in a lot of instances, some companies are involved in several major trends in technology. Facebook is a big winner here. Here's our sell going into the pandemic, our buy on the dip. We're looking to buy the next dip, and we're looking for $400 a share in Facebook. 5th generation wireless technology, or 5G. I just got my own 5G phone a few weeks ago, and it is spectacular. I got the 5G Pro. Big telecom like AT&T and Verizon will invest $30 billion to assure 5G wireless rolls out this year and next year. Increasing wireless broadband capability will increase performance of many products and services by 10-fold, including factories. That'll bring a new generation of super fast smartphones and other wireless products. Amazon brings 5G phone out. They brought their 5G phone out last month. Suddenly, many experimental technologies like autonomous driving and AI will become functional and cheap. Download a 2-hour movie in 10 seconds on your phone. Yes, I've done it myself. It is unbelievable. And there you want to look at Verizon, Xilinx, and Ciena. Ciena is one of our favorites here, and you can see our algorithmic buys. Our 2021 target there is $100 a share, or more than double the current level. Buy the next dip on Ciena. Microprocessors and GPUs, another big area, been around for a long time. We've been in some of these for yonks. Look for enormous moves up on the rollout of 5G, creating an acute global chip shortage. In a highly cyclical industry, chip producers are now facing unprecedented shortages for their products. This is enabling companies to increase margins in a rising market. Barriers to new entrants here are enormous. It costs $2 billion to build a new factory from scratch, and that's assuming you already know how to do it. So you're not going to get any new entrants out of the blue bringing new competition. Graphic processor units, or GPUs, are leading the charge into AI. They're also big in cryptocurrency. Industry is consolidating at a tremendous pace, bringing increasing pricing power. And there we love NVIDIA, Micron Technology, and AMD, Advanced Micro Devices. NVIDIA is one of our Mad Hedge 10 baggers. We originally recommended it at $60 a share. It got up to $600 a share in 4 years, and we're now targeting $1,000 a share for next year. Once you get into this company, you will absolutely love it. There's our buy there, sell here, buy on the dip, and we're looking to buy on more dips going forward. Fintech, of course, is also taking over the world, or financial technology is turning legacy banking into the next buggy whip industry, or the next leather industry. Huge, expensive brick and mortar branch networks make it impossible for banks to compete. You notice that a lot of these have closed down during the pandemic, and they're never coming back. They're just too expensive. Whereas fintech, all online, almost no overhead, few hundred people per company, and that's it. Blockchain is creating encryption for transaction security on an industrial scale. Regulation-like companies have the unfair advantage you are looking for. Paper money carries COVID-19 risks, so many stores have banned cash payments. They'll only take credit cards or PayPal or Apple Pay, and our favorites in this area are Square and PayPal. Square, another one of our big winners, and I think we're up 10 times from our original recommendation on this. We bought the last crash dip here in March, and we have gone up 5 times from the March low. It's just incredible, and we're targeting another double in 2021. So you absolutely have to get into Square. It is a fabulous company. Smartphones and their apps. Apple will see monster sales with their new 5G phones. 1 billion iPhones need to be replaced globally. That is a gigantic embedded market. Smartphones are a global market with plenty of room for growth. China and India will be the next big buyers of smartphones, and a new pro-trade administration will be a big help. However, the largest player, Samsung, only has a 7% market share, so plenty of room to grow for the largest players like Apple. Apple already dominates with 92% of all industry profits, and that is luring companies up the value train. And of course, we love Apple and Skyworks. Here's a chart for Skyworks Solution. There's our sell, buy at the bottom, double on the stock. And it's becoming a tiring story, isn't it? Except I never get tiring of getting a double in 6 months. Looking to buy the dip, and we're targeting $200 by next year. Blockchain technology is the new hot thing. While the media focuses on cryptocurrencies, the real groundbreaker here is in blockchain technology. Blockchain could eventually replace the entire banking system, could also spawn a global currency run by governments. It will be those who sell the shovels to the gold miners who make the big money. Blockchain is creating incredible new demand for every new corner of the internet infrastructure. Security is still the big issue, with theft a constant problem. IBM, NDAQ, and STK are big plays there. And there is the NDAQ, got a double already off the lows, and we are targeting $200 a share in 2021 for NDAQ. Share buybacks are going to be another big tech supercharger. Almost all share buybacks ceased during the pandemic because companies needed to preserve their capital. However, it continued in big tech, especially in Apple, where they're moving full speed ahead. Technology companies are spinning off profits so fast, they're creating massive cash balances. I think at last look, Apple had $250 billion in cash on the balance sheet. Most companies prefer organic growth, so money isn't being spent or wasted on takeovers. 80% of all takeovers fail. Dividend demands of a low interest rate world are minimal. 75% of all share buybacks are taking place in tech. When the supply of share falls, the price can only go up. Simple supply and demand. And of course, the big winners in this area are Apple, Microsoft, Micron, and Intel. Here's our Apple chart. Bought it, at the end during that great December crash in 2018. Was our last big buy at $38. We're now up to 118. We're targeting $200 a share for Apple in 2021. Microsoft, another big winner on the buyback area. I think they're number 2 in the world on buybacks, and we're looking to buy the next dip here. We are targeting $300 a share You want to get into Microsoft on every opportunity. It's a stock we absolutely love. PayPal, another one of our favorites. Got the buy here, and looking to buy in any dip. We are targeting $300 a share for PayPal. CrowdStrike, another internet security company you want to add to your list. We're looking for $200 a share from the current 147. And again, it's been a great moneymaker for us since it first went public. Alibaba is a Chinese online commerce giant. It's a combination of Amazon, Google, and PayPal, but with a market that's 4 times larger than that of the United States. And we think Alibaba could be worth $400 a share sometime in 21, up from the current 270. And the nice thing about Alibaba is we've just had a really big sell-off because of the failed Ant Financial IPO. So use that as your opportunity to get in right now. So how do you take advantage of all this? Well, we have the Mad Hedge technology letter. It's the one sector you absolutely must follow on a daily basis. This is a 3 times a week read of the most important developments in technology, giving you the best stock plays possible. It includes a time-sensitive trade alert service sent out at market sweet spots. We send out about 150 trade alerts a year for the tech letter. It is researched by a dedicated technology analyst based in Silicon Valley. We are all over these companies every day. Very few surprises happen for us in Silicon Valley. These are all our neighbors. We will send you immediately actionable trading and investment ideas on every important stock and subsector in technology. Finally, here's the detailed understanding of technology you have long been looking for. With a blistering earnings growth rate and near immunity to COVID-19, just a matter of time before technology stocks break out to new all-time highs again. Watch this space melt up big going into 2020 and 2021. Get ready to start reeling in those whoppers with the Mad Hedge technology letter as your guide. And yes, that is a 24-inch rainbow trout, which I caught in northern Nevada. Unfortunately, it's catch and release. Mad Hedge technology track record is nothing less than spectacular. It's proven history of delivering blockbuster technology trade recommendations, in-depth research reports on the technology companies and industries follow shortly. Get in on the early stage on every big trend. Let a 50-year technology veteran translate my experience into winning trade alerts for you. Here's one of our secret weapons, the Mad Hedge profit predictor. That's a market timing index, an artificial intelligence-driven algorithm that analyzes 30 different economic and technical and momentum-driven indicators. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real-time and optimizes returns with the addition of every new data point far faster than a human can. Imagine a trading strategy that upgrades itself 30 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your profits mightily. This is what we get normally in a year. This is 3 years of buy and sell recommendations from our algorithm. As you notice, we get plenty of buys, plenty of sells every year. A lot of room here for mini round trips a year and plenty of opportunities to make money. Here's how it works. We spotted a opportunity to buy Micron technology a few years ago. So we sent out a buy recommendation, and it looks like this. Buy Micron technology at 42.01 or best. It's an opening trade. To get a $10,000 exposure, you needed to buy 238 shares. What happened with this trade alert? In 15 days, it went up 15.63%. So what did we do? We sent out another trade alert, and it said take profits, sell Micron technology at 48.58 or best, closing trade. In this particular example, we made $1,563 in only 15 days, or a profit of 15%. And we just knock these out every day, all year long. You get those kind of trade alerts. You get to do things like buy the hottest new car, the Tesla Model X High Performance. That's the $162,000 fully tricked out with the ludicrous mode. Warning, if you are going to go from 0 to 60 in 2.9 seconds, bring lots of air sick bags. I'm immune to car sickness because I'm a combat pilot. My kids, not so much. So bring those air sick bags and a couple of extra towels might be nice too if you want to keep that new car smell. This is my first Tesla, which I bought 12 years ago. Even the best design in the world isn't going to help you from a drunk driver on Christmas Eve driving a GM Silverado. A lot of people talk about Tesla, very few take them to pieces. Use the opportunity to completely strip the car down, see what made it tick. Here you can see the 1,100-pound lithium-ion battery underneath the back seat. In 2 or 3 years, that may be a 60-pound battery that takes you 400 miles. And here you can see the carbon fiber wheel wells, honeycomb wheel wells that make it the safest car in the world. Within 5 years, the entire car will be made out of carbon fiber, reducing the weight by 90%, while increasing the strength by 500%. We first recommended Tesla to our clients at a split adjusted price of $3.30. It was up 155 times from that original recommendation. I think we added another 5-bagger today, or another 5 times today. It's more like 160 times with the move over the last day or two. So we think Tesla eventually hits $2,500 a share within 5 years. Warning, I have been wrong on Tesla because these huge gains happen a lot sooner than I or anybody else expects. Another big winner of ours has been Lam Research, up 77% in 10 months. Micron Technology up 73% in 1 month. Baidu up 21 times from our original cost. You need a real pro to guide you through the technology maze. Not all tech is monolithic. There are both great tech stocks and awful ones. You can earn a 10 times return on the great ones, but get wiped out by the lemons. A lot of tech stocks go public right when earnings are peaking and their business models are about to die. Happens more than you want, believe me. This is why you need me to stay up to date. You could copy all the ticker symbols from today's webinar and probably do okay for a few weeks. However, the tech investing can be notoriously volatile. Today's darling can be tomorrow's goat. Just giving you today's popular names is like handing you a book of matches in a gasoline refinery. Let me keep you current on all the latest earnings reports and developments is the best way to make your tech profits. This is our trailing 1 year return right now, 58.48%. That is not bad. Most people will take that during a pandemic year. And if you think I was just lucky this year, this is our 11-year return, and we have averaged 37.24% a year. That is 2 times the S&P 500 with a lot less volatility. Our biggest drop in 2020 was down 12% during the pandemic crash. The S&P 500 dropped 40% at the same time. So this is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That is what I charge my major hedge fund clients for advice on the technology sector, and they're happy to pay it because I make them millions of dollars. And I'm not going to charge $10,000. That's what I charge my concierge clients for a personal one-on-one counseling. And I'm not going to charge $2,500. This is the regular price on my website for the Mad Hedge technology letter. This is the real deal. Creating this product cost me millions of dollars with the best customer service in the industry. Running it cost me millions more. Here's the offer you can't refuse. 1 year for just $998 for new subscribers only. That is a one-time only 60% discount from the website price. Just click on the chat box on the right. That will take you to a dedicated sales page that is only up today. We're taking it down after midnight. With this subscription, you will get a 3 times weekly newsletter highlighting the most important developments in tech, immediately actionable text and email trade alerts that are sent out at market sweet spots, live coaching through a bi-weekly strategy webinar and interactive Q&A, same-day answers emailed to questions about specific tech companies, special reports on the dominant trends and players in tech, access to a 13-year database, getting an unfair advantage in the most important investment theme of your lifetime will be the best decision you ever made. Today and only through this webinar, let me show you how to make the money to pay for your own subscription. Subscribe now and you will immediately receive an urgent trade alert right now, the second your order goes through the system, and that literally is in a few seconds. Probably cover the cost of this letter for the next year. Buy now and you'll also receive my Mad Hedge Armageddon portfolio. These are stocks to buy at the market bottom and then forget about for the rest of your life. Buy now and you instantly get this trade alert. And remember, 90% of these trade alerts turn out to be profitable, most of them immediately. So don't leave money on the table. This will be some of the most serious money you have ever made in your life. And just to give you a tease, this is the chart on the trade alert we will send out immediately as soon as you subscribe to our service. Not going to tell you if this is a buy or a sell. You have to go through 1,000 charts to find an opportunity this good. You just let me do the heavy lifting for you. So we only take 25 new subscribers at a time because we don't want everyone piling in trying to buy the same trade alerts at the same time. So it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. So today and only through this webinar, 1 year for just $998. And I'm going to keep this page open for a while so you can get access to the link. In the meantime, I'm going to take a look and see if we've got any orders in. And yes, we've just gotten one from Doug in Bangor, Maine. Doug, thank you very much for subscribing to our service. I promise to work hard to earn your money. Okay, here's another one from David in Seattle, Washington. Thank you very much, David. Okay, a whole bunch of orders have just come in. We have here Bill from Houston, Texas. Thank you very much. We have Robert from Chicago, Illinois. Let's see what else we have. Okay, we have Jim from San Francisco, California. Thank you very much for coming in, Jim. We have Tammy from, let me take a look and see where this is from. Kansas City, Missouri. Okay, thank you very much. Okay, I can see we're going to hit our 25 limit in the next few minutes. So if you are sitting in the fence, you have any doubts, time to sign up is now, because the store shuts down the second we hit that 25 limit. So I'm going to leave this open for a while. This is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.